Sarah is 32. She works in marketing. Good salary, steady job. She has a car loan at 6.9%, a credit card balance of around $4,800, and a mortgage she took out 3 years ago. Every month she pays $340 for the car, $150 to the credit card, more when she can, $1,680 to the mortgage. She's never missed a payment, not once. 3 years pass. The car loan is nearly done. The credit card balance is lower, $3,200 now. The mortgage has 27 years remaining. She checks her credit score, 758. Excellent. She feels responsible. She feels like she's doing it right. But when she looks at the total, when she adds it all up, she realizes something uncomfortable. She's been paying for years, and she's still here. Nothing went wrong, no crisis, no reckless spending. She did everything right, and they're still waiting. This isn't a failure story. It's a design story. Most people believe banks make money by holding deposits, by safeguarding savings, by helping people build wealth. They don't. Banks make money when you owe them, not when you save, not when you're solvent, when you owe. Debt is the product. You are the subscription. And the business model doesn't depend on you failing. It depends on you continuing. Financial freedom is unpredictable. It's volatile. It ends relationships. A person who pays off their mortgage in 5 years instead of 30 is not a better customer. They're a problem. Because freedom doesn't generate revenue. Participation does. But here is the question. What if getting out of debt was never the goal of the system? A bank doesn't want you to default, but it also doesn't want you to finish. Long-term debt is valuable because it's stable, predictable, forecastable. A 30-year mortgage at 4% interest generates steady income every single month for 3 decades. A credit card balance that hovers between $3,000 and $8,000 for years, revolving, renewing, never quite disappearing, becomes a reliable income stream. But a customer who pays off a loan early, that's revenue loss. Not celebrated, not rewarded, written off. Early repayment is technically allowed, but structurally discouraged. Some loans include prepayment penalties. Others simply front-load the interest, meaning your first 5 years of payments barely touch the principal at all. You're not paying down debt, you're paying for time. Credit cards work the same way. If you carry a $5,000 balance and pay only the minimum, let's say $150 a month, you'll spend over a decade repaying it, and you'll pay nearly $4,000 in interest. But if you pay it off in 6 months, the bank earns almost nothing. The system is not built to help you escape quickly. It's built to stretch time. Lenders don't measure success by how fast you're free. They measure it by how long you stay. The term for this internally is customer lifetime value. A borrower who stays in debt for 20 years is worth more than a borrower who finishes in 5, even if they borrowed the same amount. Freedom is expensive for them. Endurance is profitable. This is why the system is engineered to feel manageable, not urgent. Payments are calibrated to relieve pressure just enough to keep you functioning, not drowning, not free, comfortable enough to continue, anxious enough not to stop. The goal is sustainability, not resolution. Debt, in this sense, is not a trap door, it's a corridor. Long, well-lit, lined with signs that say you're doing fine. And as long as you keep walking, the system works exactly as intended. The minimum payment is one of the most elegant pieces of behavioral design in modern finance. It does two things at once. First, it keeps you in good standing. You're not delinquent. Your credit score doesn't drop. You feel responsible. Second, it ensures you make almost no progress. Take a $6,000 credit card balance at 18% APR. If you pay the minimum, usually around 2% of the balance, you'll pay roughly $120 the first month. $90 of that goes to interest. $30 goes to the principal. You just paid $120 to reduce your debt by $30. Next month, the same thing happens, and the month after that. You're moving, but you're not advancing. It feels like control. It looks like responsibility, but mathematically, you're just renting your own debt. Most people never realize how long it actually takes. They see the payment going through. They see the balance dropping, slowly but dropping. It feels like progress. But if you only make minimum payments on a $6,000 balance, it will take you over 20 years to pay it off. 20 years for $6,000. The system doesn't hide this information. It's disclosed, legally required even. But disclosure is not the same as comprehension, and comprehension is not the same as action. The minimum payment gives you just enough movement to stay calm, just enough reduction to feel functional, but it keeps you exactly where the system needs you, in motion, not free. This is why the minimum payment is framed as a choice, not a warning. It appears optional, flexible, humane, a way to manage debt rather than confront it. But the choice is shaped long before you ever make it. The number is calculated to protect the system first and your time second. What you're really paying for each month is not reduction, but permission. Permission to remain inside the system without penalty. As long as you pay, the machine stays quiet. No alarms, no consequences. Just the slow understanding, years later, that movement was never the same as escape. Your credit score is not a measure of how trustworthy you are. It's a measure of how profitable you are. A person with no debt, no loans, no credit cards, no mortgage, will often have a lower score than someone carrying $20,000 across 3 accounts. Why? Because the system rewards participation, not independence. A credit score is built on factors like payment history, credit utilization, length of credit history, and types of credit used. Notice what's missing: wealth, savings, income stability. You're not being graded on freedom. You're being graded on how well you play the game. If you've never borrowed, you're invisible, unscored, untested. If you've borrowed and repaid consistently, never finishing, never defaulting, you're ideal. The score rises when you open new accounts. It falls when you close them. It improves when you use credit. It suffers when you don't. The algorithm doesn't care if you're stressed. It doesn't care if you're one missed paycheck away from disaster. It cares whether you're active. Credit scores are sold as tools of empowerment, as proof of responsibility. But they're not built to help you escape debt. They're built to measure how well you live inside it. A perfect credit score doesn't mean you're free. It means you're participating correctly. Inflation is rarely discussed in personal finance conversations, but it's one of the most important forces in the debt system. When inflation rises, the cost of everything increases: groceries, rent, gas, insurance. But your debt payments stay the same. That sounds like relief. It's not. Because while prices rise, wages lag, sometimes by years. You're earning the same amount, or slightly more, but your purchasing power is shrinking. Which means every dollar you were using to pay down debt is now needed elsewhere, for food, for rent, for survival. So you slow down, you pay the minimum again, you stretch it out, and the clock resets. Inflation doesn't just erode savings, it extends repayment timelines, and banks benefit from both sides. When inflation rises, central banks raise interest rates. This makes new borrowing more expensive, which makes old debt feel more manageable by comparison. But it also makes it harder to pay off. You're stuck between two forces: rising costs and fixed payments. The system tightens, not by raising your debt, by raising everything around it. And the longer you stay in debt, the more interest you pay, not because you failed, because the environment shifted. Inflation doesn't punish reckless borrowers more than responsible ones. It punishes everyone who owes and rewards everyone who lends. Here is a bitter truth. A person with no debt is a bad customer. Not morally, structurally. They don't generate interest. They don't carry balances. They don't need refinancing. They're financially inert. And inert customers don't drive profit. This is why credit is offered so freely. You don't have to ask for a credit limit increase. It just appears. You don't have to apply for buy now, pay later at checkout. It's already built in. You don't have to seek out a car loan. The dealership has 6 options waiting. The system doesn't restrict access to credit. It expands it. Because every new account is a new opportunity. Every credit line is a potential revenue stream. Borrowing is framed as access, as flexibility, as freedom. But it's not freedom. It's managed dependence. The language is careful. Build your credit, unlock rewards, upgrade your lifestyle. None of these phrases mentions debt, but all of them require it. And the result is the same. You stay connected, not trapped, not forced, just connected, month after month, year after year. You're not being chased, you're being kept. This is what most people misunderstand. The system doesn't want you to collapse. Defaults are messy. Bankruptcies are expensive. Foreclosures require lawyers, time, and risk. The ideal customer is not someone in crisis. It's someone in endurance, stressed but functional, behind but not broken, paying but not finishing. This is the model. Not a trap, not a cage, a treadmill. You're moving, you're working, you're making progress, sort of. But the distance never closes. And the system doesn't need to push you. Gravity does that. Inflation pulls you back. Interest pulls you back. Life pulls you back. All the system has to do is wait and offer another credit limit increase when you're tired. You're not a victim. You're a participant, and participation is the point. The longest chains are the ones you don't feel. This is not a call to action. It's not advice. It's just clarity. The system is not built to help you become debt-free. It's built to keep you functional while indebted. That's not a conspiracy. It's a business model. And once you see it, you can't unsee it. You weren't failing. You were participating. And the difference between the two is almost invisible until you stop moving and look around. Most people never do. They keep paying, keep maintaining, keep participating. Not because they're weak, because the system is patient. The system doesn't chase you. It waits. And most people never realize they were running in circles.